Now, all you keen market watchers must have missed that rally in another asset. And we are talking about two assets, not just one, after underperforming for much of 2022. Now, gold and Bitcoin. These two are back in the green. Gold is now trading 14% higher on the MCX, while Bitcoin has regained the $21,000 level. And all the other cryptocurrencies are up there with Bitcoin, so it's not just Bitcoin. What's the outlook then for these asset classes for the rest of 2023? Just to understand the kind of rise that we are seeing in gold prices, just to understand why cryptos are rising again after sentiment has been so weak in recent times, what with the crash of FTX and WazirX, these cryptocurrency exchanges. Let's just understand from Sharad, from the outset, what are the factors that are at play? Sharad.
In focus, we are having a tale of two assets. Now, first one is going for safe investment asset, and another is a risk on sentiment, which is increasing. Now, the important thing is the dollar index is hitting its 7-month low, and another important thing is there's a less aggressive stance coming in from Fed that indicates smaller rate hikes going ahead. Now, let's look at the MCX gold prices. That is up more than 56,000 rupees on MCX today, and it's been rising for the last 4 months by almost 14%. Internationally, also the prices are almost at a 9-month high at more than almost $1,900 per ounce. And of course, do remember the buying is coming in from the central banks as well as from China because of the new year coming in as well. And of course, it's a safe investment as well. Now let's look at Bitcoin. It's hitting above the $21,000 mark, and this is coming at its highest level in 2 months as well. It's trading in positive territory for the last 13 days. And today itself, it has passed the critical 200-day moving average levels as well. And if you see the global crypto market, entire market, that has also risen by almost 2 to 7% over the last 7 weeks or so. And do remember, it's about to touch the $1 trillion mark. And lastly, I would just like to point out that the important trigger coming in from the crypto space, apart from the reasons which I have discussed, is that financial majors such as BlackRock and Morgan Stanley are also increasing their stake in the crypto world.
Yes, we are seeing that stake in cryptocurrencies rising when it comes to central banks as well. But thanks very much for that, Sharad. Let's put that in perspective with what we got from our managing editor here on ET Now. Nikunj was talking about gold and cryptos earlier in the day. This is what his take is on the kind of rise we are seeing.
It's discussing recession. Markets are not discussing growth. Markets are of the view that 2023 is going to be a slow year.
That's a big factor.
Yeah. So is it only a China trade? Then if this is only a China trade, then why is gold going higher? Why is Bitcoin going higher? Is this one of those risk-on moments where from Bitcoin to gold to metals, everything is going higher? Normally, gold does well when there is fear in the world. So if world is indicating, if financial markets are indicating that, look, there is going to be a recession or a mild recession in the second half of this calendar year, then arguably gold will go higher. Then why is copper going higher? Copper is an indication of industrial demand. You call it Dr. Copper. Say that, okay, copper go, yeah, I mean, that's how you look at it. You look at copper as an harbinger of what will happen to industrial demand. So why is copper going higher? Well, that's because of China. Then if everything is going higher, I would throw in Bitcoin in center. Bitcoin is a clear indication of low liquidity and high growth. So it's not really adding up totally. I wish I had an easy answer. I've been thinking through it. And if indeed it is metal comeback trade is connected to China, then why crude is not making a comeback? So it's just one of those patches in the market where you don't know which way things are, because the data points in the metal market or in the crypto market, they're just not adding up, at least in my book.
All right, so that is the kind of take that we got from Nikunj earlier when they were having a conversation. But let's get expert perspective from Craig Erlam, Senior Market Analyst at OANDA, is joining us on the show along with Arnab, the Global Market Strategist for EMEA at Invesco. Craig, coming to you first, why do you think we're seeing these gold prices rise for one? Do you think that rally is going to sustain with the kind of factors that are at play, especially if inflation continues to dip lower all around the world on the back of all those interest rate hikes? Already we've seen that pullback in US bond yields, haven't we?
Yeah, I think it could be sustained for now. And as you've alluded to, I think it's very closely linked to the bond yield story. I mean, we look at how markets were trading last year, lots of risk aversion, but gold wasn't very well supported. And that's because at this point in time. At that point in time, bond yields were rising and because interest rate hikes were being priced in. And that made gold less attractive. Well, now we're kind of seeing the opposite. We're seeing a bit more risk aversion potentially for this year in the market still, even if we're seeing much more bullishness at this point in time. But also seeing the terminal rate being priced lower in the markets. We're seeing lower prospects for rate hikes from the Fed going forward to 25 basis points in February. And more we're seeing people talk about the prospect of a rate cut or two later on this year. So it seems that interest rate expectations are moving in the right direction. That's meaning lower yields, and that's being very bullish for gold. And if we get that risk-averse environment on top of some of those things, if some of the economic data or the earnings season, for example, doesn't do well in the shorter term, then that could still continue to support the yellow metal on this time.
Fair enough. Arnab, what's your understanding? Where are we on global growth concerns right now? Some experts seem to be suggesting a risk-on kind of sentiment that's building up now, which is perhaps why we are seeing cryptos on the rise too. So the conundrum is why we are concerned about global growth, and yet there is the turning on of the risk tap, as it were. How do you see it?
Yeah, look, I think the sort of common thread that unifies all of these stories that are going on in this kind of risk-on environment is, kind of a disinflationary growth story, right? I hesitate to use the term Goldilocks, but that's the direction of travel, let's say, right? That people are thinking now that we're having disinflation, central banks, as has been said, central banks can ease up on the pressure to keep raising rates in an aggressive and sort of large move kind of way. So tapering the pace of the rate hikes and then eventually leveling off. Maybe it's a bit of a stretch to say that there's going to be cuts early on in the process as the market seems to be, starting to price in. But that's nevertheless the direction of travel, right? So easing inflation allows central banks to be less aggressive. That allows for more of a lending. The combination allows for speculative assets like cryptocurrencies to go up along with risky assets like equities and credit spreads to come in. Meanwhile, gold is also being supported by all of those phenomena, plus the idea of the geopolitics and the continued move by central banks into more gold, not necessarily fully substituting away from or shifting out of dollars, but at the margin adding a bit more gold and a bit more other reserve assets than dollars and treasuries.
Yeah, fair enough. And Craig, what's your own sense of cryptocurrencies right now? How are they likely to move this year? Because it's not just Bitcoin, even Ethereum, other cryptocurrencies are moving up. Do you see them consistently recover the ground that they lost in 2022 and rise higher from the levels they are at now?
I don't think they'll recover 2022. I think they'll remain extremely volatile. We're in a risk-on phase at the moment, but I always say with these markets, the first month of the year quite often is not indicative of what we can expect for the rest of the year, and it may turn out to be this time as well. Hopefully that won't be the case, but you never know, especially when we've had such a downbeat end to the year. To an extent, we didn't really see that kind of Santa rally that many were hoping for. So perhaps we're just seeing that a little bit delayed in January. But I do think it's still going to be a volatile year, and it almost feels like we're kind of sitting on the fence here by saying that, because that seems to be the only thing that seems quite obvious at this point in time. We're going to see our good periods, we're going to see our bad periods, we're going to see some economic data that's disturbing. It wouldn't surprise me if the next couple of weeks with the earnings season tends to be a little bit more downbeat as well. We maybe start to hear more about layoffs and as more slack in the labour market starting to appear. That could create some downbeat tones as well. So it's going to still be a challenging environment for cryptocurrencies, even if we don't see any further contagion effects from the FTX fallout or any other weaknesses appearing with any other firms within the industry as well, which creates that downbeat note as well. I also think cryptos are probably benefiting a little bit as well from the fact that I think, if I'm not mistaken, they really did miss out on that bit of upward momentum we saw in risk assets a couple of months ago. That would kind of happen around the same time with the FTX fallout as well. So while other riskier assets and equity markets, for example, were doing quite well, cryptocurrencies seem to miss out on that. So I wonder if there's a bit of catch-up effect at play as well, because Bitcoin and other cryptos over the course of the last 2 weeks have performed extraordinarily well.
Arnab, do you think that there will be a stronger correlation between how the US equities do and how the cryptos do from here?
Yeah, I think it'll help. If we have a more sort of easing monetary environment where if inflation is falling, right, then real rates are going up, of course, which is not necessarily good for equities or for crypto assets or for gold for that matter. But if that is being accompanied by this kind of disinflationary slowdown, not a full-blown recession, but a disinflationary slowdown that allows for this kind of idea of a soft landing or soft-ish landing, that could be good for equities and probably supportive for crypto as well, because again, it implies less aggression from the Fed and the ECB and others.
In the kind of scenario that we are in right now, Craig, because gold is considered a good hedge against inflation. Now, if inflation is coming that much more under control, then do you see demand for gold taking a dip in times to come, the near future?
To be honest, I think the market is quite supportive of gold right now, as we've all alluded to. We are seeing signs of disinflation. That's a positive, I think, for gold, because it means that central banks have to be less active in terms of raising interest rates. It means that we could see a bit of a softer landing. I think the dollar's been a major headwind for gold, and I think the fact that we've seen so much risk aversion over the last year or two, which has very much favoured the US dollar, there is potential, a lot of potential for the dollar to continue to pair some of those gains as well, which could be supportive also. So we're not really seeing the typical relationship that we associate with gold, where it's just risk off, high inflation is favorable for gold. I think it's almost the opposite to some extent because of the way the events have unfolded. You've got to remember, this is not a typical kind of scenario that we've seen over the last year or so, where we're talking about the US, and then we're talking about the US central bank having to hike rates aggressively in order to cut off inflation because the economy is overheating. This is very much a post-pandemic supply chain initial issue, energy market issue, and something that's kind of transpired into the aftermath and all the events that we've seen over the course of the last 12 months. So the way that gold's behaved is not necessarily typical, and therefore I wouldn't expect it to be in the same way be typical in what you'd expect during a kind of recovery phase or during a period of risk on, which is what we're seeing right now.
The onset of fear, really, Arnab, when you talk about FTX and then the fall of WazirX before that as well, that really dampens sentiment towards the cryptos, and governments, so many, including in India, they haven't really taken to cryptos very kindly. In that kind of scenario, to see cryptos rise, doesn't that surprise you right now?
Look, I think, it's like a lot of speculative assets that have no cash flows, that have no yield, including gold itself. When you're in an environment in which rates are going up, the dollar is going up, instruments with cash flows, particularly not so risky cash flows, are becoming more attractive. That's an environment in which assets with no cash flows, zero cash flows or long dated cash flows, are going to become less attractive. So I think that was one of the things that was driving down the crypto space and gold previously, right, in the tightening monetary policy environment. Then we got hit by, yet another round of this kind of fraudulent challenge in the crypto space with FTX and others, as you've mentioned, right? And I think that is a bit of a conceptual problem. And I think that remains to be answered. And maybe, to some extent, it's idiosyncratic, right? Specific to FTX or this or that exchange or provider of cryptos, although there have been a number of those sorts of issues. I think the underlying problem that cryptocurrencies have with governments is that, at the end of the day, a currency is a legal construct as well as a financial one, right, through ideas like legal tender. And no government, no central bank is ultimately going to take kindly to the idea that, somebody somewhere is going to try and privatize that function of the state, right? The state's going to be able to win that in the end if it's a credible state, because it's going to be able to demand payment in taxes and pay its own suppliers and employees in that currency, in its own currency, the currency of the realm, right? Instead of, losing that monetary sovereignty to a cryptocurrency, right? It's bad enough many countries have lost monetary sovereignty to the dollar or some other, provider of international currency. They're not going to want to do that with private individuals. So I think the currency part of the cryptocurrency offering is really quite a challenge. And I don't think cryptocurrencies are ultimately going to win on that front. The underlying technology, of blockchain, that may have quite a lot of value, and that remains to be seen. And that's not really, I think, what's been driving Bitcoin or this or that cryptocurrency up or down, right? It's really this speculative trade being driven by low interest rates and monetization or the lack of it.
Well, this helps us understand, about the relatively longer future of cryptos. I just want to get from you, Craig, before we let both of you gentlemen go. In terms of the dollar index right now, what are the projections that you're working with, and will that give us a clearer idea of how gold prices and cryptocurrencies are going to do now?
Well, the dollar came a long way over the course of the last 12 to 18 months. And it seemed to be a bit of a one-way trade, and one that there was kind of almost unanimity on with regards to what the trajectory was going to be. It was benefiting both as a function of the central bank tightening more aggressively than most others, the economy being more resilient than most others, and then there was the safe haven element as well. So there's quite a bit of unwinding to be done, not to say that it will be fully unwound, but there's quite a lot of unwinding to be done. So I do think that we could, if we remain in this risk-on environment, if we continue to see disinflationary pressures, and if we continue to see resilience within the economy, and more so in the global economy as well, I do think there's plenty of room for the dollar to give back some of the gains that it came during those uncertain, troubled times of the last 12 to 18 months. But this is a lot of ifs, buts, and maybes. And that's what I keep saying about the first month of the year, and in this case, the first 2 weeks of the year. It's not always indicative of what's to come. There's a lot of optimism in the markets that wasn't here a month ago. And yes, a couple of things have changed. A couple of big things have changed. That jobs report was a massive shift alongside the revisions. The inflation data has continued on a much more positive trajectory, but things can shift in the other direction as well. And I just don't think the path back to 2% is going to be as straightforward as the path to 9.1. And that's the upside risk really for the dollar, is that we could get a couple of unfavorable data points. We see the Federal Reserve and other central banks digging in their heels, and that risk aversion starts to come back into play. And that's something that would work favorably with the dollar. I think the only thing that's really guaranteed this year is that we're going to see plenty more volatility. And as we saw last year, maybe not quite as many surprises, but I think there's probably a few more around the corner.
Will be surprises, but like Craig says, there will be volatility, and it may be lesser than what we've seen in the year gone by. But really, it's up in the air still. But for the moment, we can say that gold is now trading 14% higher. At this time, at least on the MCX, and the Bitcoin has regained the $21,000 mark, along with other cryptocurrencies as well. Arnab and Craig, it's always a pleasure getting your perspective in here on India Tonight. Thanks for joining us on the show.